Hello and welcome to Business Incorporated live on Channel Television. We see the Thursday trade that's moving along quite well, even here in Lagos, Nigeria. But here are the stories you should be watching on the continent. Angola's oil output dips below the 1 million barrel mark, marking a major setback for the country's revenues and energy outlook. And in a bid to rein in rising prices, Rwanda's central bank has lifted its benchmark repo rate by 25 basis points. Plus, after over a decade of dormancy in the sector, South Africa is stepping back into deep-level mining. The country is preparing to launch its first new underground gold mine. It's good to have you join us. Let's get a check on what's playing out in the oil market. Now, see oil prices rose about 1% today, bolstered by signs of strong demand in the United States, with uncertainty over efforts to end the war in Ukraine. Also, lending support there. We see Brent crude futures a big 1.06%, trying to make it a move back to that $70 a barrel level. We'll see if that manages to happen this week. WTI crude still the range trade there, $63.42 a barrel, a bigger 1.13% rise there. We'll see attempts to resolve security issues relating to Ukraine over the war without Moscow's participation. That's giving some kind of uncertainty there, but we're seeing the traders right there, investors in the oil market, still trying to snap some profit while the uncertainty lasts. But in other news now, Angola's oil production that's fallen below the 1 million barrel per day mark for the first time since the country's departure from OPEC over 2 years ago. According to data from Angola's National Agency for Petroleum and Gas, crude output declined to about 998,000 barrels per day in July, reaching its lowest level since early 2023. The drop underscores a persistent challenge for the country's oil sector following its exit from the cartel. That's talking about OPEC. All right, let's get a check on the metals market now. See gold prices slipped lower today, pressured by increasing uncertainty over U.S. interest rates ahead of the start of the Federal Reserve's Jackson Hole Symposium. So we're seeing red on the screen there. Spot gold down 0.1%, $3,341. U.S. gold futures also down 0.1%. But we're seeing silver there managing to stay unchanged at this point. Not red, not green. $37.26 per ounce. Platinum 0.3% down, still holding on to the $1,300 level. And palladium, that's down 0.1%. See the yellow metals traded in largely range-bound fashion this week as uncertainty over U.S. rates that's deterred any major trades at this time. All right, let's look at that's East Africa. We see Kenya is preparing to refinance a series of Euro bonds maturing over the next decade in a bid to smooth out its repayment obligations, and that's according to the Treasury Secretary, John Mbandi. The government aims to prioritize a $1 billion repurchase of 2028 securities while managing more than $5 billion in Eurobond maturities. That's by 2034. The move follows February's $1.5 billion Eurobond sale, which was used to retire 2027 notes and comes as authorities also renegotiate near-term loan repayments with the Trade and Development Bank. So that's a big story right there in Kenya. And we see Rwanda's central bank, they've raised their benchmark repo rate by 25 basis points to 6.75%. And we see the governor, Mr. Soraya, there announced the move today. The move, lifts the rate from 6.5%, reflects the bank's latest adjustment to the cost of borrowing for commercial lenders. Then in South Africa, we see the Civil 20 chairperson, Thulani Shifuta, says the current volatile global geopolitical climate has laid bare the vulnerabilities of many economies. But he believes Africa can turn this uncertainty into opportunity through the African Continental Free Trade Area. Shifuta was addressing the media in Pretoria and the progress made by C20 working groups. Take a listen.
The ever-dynamic emerging geopolitical developments have a significant disruptive impact on our global economic landscape. The turmoil in the global trade, in our view, must be considered as an opportunity in crisis for the African continent as a whole to expedite the full-scale implementation of the African Continental Free Trade Agreement and leveraging alternative markets. Otherwise, we will be caught unprepared and stuck with products and services that should be enjoyed in the global markets. We must premise this work on the appreciation that all the trade that we do is not done as handouts.
All right, for the fast food lovers there, we see pizza, a beloved fast food staple for many Nigerians, but recently become a luxury. In the last 12 months, the price of a large pizza has surged by over 44%, climbing from 9,000 naira to around 13,000 naira. This sharp increase is driven by soaring input costs, including imported mozzarella, cheese, and flour, as well as high overhead costs there. And with rising price inputs, let's see how sustainable this is and who's going to step in to help at this point. Well, joining us to unpack this, we have Alamin Vincent, an analyst with financial derivatives company. Great to have you, Alamin. So looking at the data you provided so far, we're seeing the large pizza from 9K to about 13,000 naira. Pizza ingredients, the cost there, mozzarella cheese, that's up about 13%. About 30% of the cost, and that's also, higher at this point. Talk to me about, what's really, is that the only thing driving, this price at this time? Is the demand, matching it? Is this sustainable? Seeing prices rising so sharply, especially I know, people love pizza a lot here, some people.
Good afternoon. Thank you for having me. Yes, that's very correct. We have seen a price surge from 9,000 to 13,000 in the large pizzas. And this is mainly due to the rising cost of the ingredients, especially the cheese, like you mentioned, the mozzarella cheese. Mozzarella cheese is imported into Nigeria from either the United States or Italy. So the importation cost, alongside the increase in price of the cheese itself, put together has caused the pizza price to increase. Alongside that, the pizza franchises in Nigeria have been able to drive demand towards them with the use of price discrimination and product specialization, making varieties of pizza that Nigerians can relate to. On some menus, you could see them with some sort of jollof rice pizza or suya pizza, different things that Nigerians could actually relate to, as well as making smaller sizes to be making more affordable and drive demand towards them. But in regards to that, if we continue to see such price surge, it may not really be sustainable for the pizza business.
All right, maybe someone should also explore maybe amala pizza, at this point, if you're trying to, get Nigerians in. But are we seeing, consumers shifting, to cheaper alternatives?
I mean, as we both know, pizza is not an everyday food for Nigeria. It's not like the rice, yam, bread that Nigerians consume on a daily basis. It's a luxury snacks. So with consumers having the option of switching to substitutes such as shawarma, burgers, and the likes, definitely there will be a switch in demand from the pizza to the other substitutes, especially because they are cheaper in price.
All right, we're having, stable exchange rates so far, this year. I guess that's a plus. How are you seeing that, affecting pizza prices going forward?
Yes, of recent, the exchange rate has been relatively stable for a while. I mean, yes, this is a plus for the pizza industry, especially because they import the cheese, but this doesn't necessarily mean that we wouldn't see any further increase in the price. But if it does, because there are other factors such as the utilities and the other cost of production for the pizza, but it does mean that if we should see an increase in the price of the pizza, it's be at a much more slower rate.
All right, let's look at the Nigeria pizza industry structure there. We have limited presence of global pizza giants in Nigeria. Major players have like Domino's, Debonairs, Pizza Hut. Few other international entrants, despite the market size. Why are major, global pizza giants, it seems they're hesitant to enter the Nigerian market?
Yes, the major players in the pizza industry are hesitant to enter the Nigerian market. As you can see, we only have very few major players like the Domino's, the Bonnet, the Pizza Hut, for many reasons. Starting with the infrastructure in Nigeria, the challenge with the infrastructure, the supply chain and all that they had to face coming into Nigeria. Alongside the competition they face, Domino's was one of the first, if not the first, pizza franchise that came to Nigeria. Others have followed suit, but none of them seem to be able to really compete with Domino's. Today, Domino's still has the largest market share in terms of pizza industry in Nigeria. So coming to have to rival with that plays a huge factor into why they'll be hesitant to come into the Nigerian market.
All right, can we expect some kind of change in the industry soon?
Yes, like you said, the exchange rates have been relatively fast for a while, so this could create more opportunities, and it's an advantage seeing that it will cost less to import the cheese and the production process. It could maybe influence other players in the pizza industry to move and start franchises in Nigeria.
All right, thank you so much, Alamin Vincent, an analyst with Financial Derivatives Company. Hopefully I can get a pizza after this. Thank you so much for coming on today.
Yeah, thank you. Thank you for having me.
All right, let's get a check on what's playing out with the markets now. Following 2 consecutive days of losses, the Nigerian stock market opened in positive territory today with the all-share index getting about 34 basis points earlier, about 11 a.m. today, and driven by a rebound in key banking stocks like GTCO, Zenith Bank, UBA, which pushed the banking index up about 123 basis points, while a few major stocks like International Breweries, Giants Bank recorded significant gains. The insurance sector took a heavy hit, again, dominating the losers chart. Meanwhile, the oil and gas sector also shed losses. But all in all, still holding on to 140,000 level, 0.20% up there for the NGX All-Share Index. The Johannesburg Stock Exchange, a bigger move up, 0.48%, still holding on to the 100,000 level by about 1,542 points. It's still upbeat trading right there in South Africa. Staying in positive territory. Let's look at the other markets we track now. See North Africa, that's the EGX 30. That's the lone loser there, about 0.24% down. And this slipped as high as 0.66%. Key sectors, including travel, construction, financial services, were down today. Then we see the Nairobi Stock Exchange, a big move, 0.94% yesterday. It closed at 167.75 points there. Let's get a check on the Middle East markets now. See, most Gulf stock exchanges were trading cautiously as investors are waiting insights on U.S. monetary policy from Federal Reserve Chair Jerome Powell's upcoming speech at the Jackson Hole Symposium. The region's markets remain, highly sensitive, at this point. So we're just seeing marginal gains in the UAE, 0.06%, and 2 basis points for the Abu Dhabi index. Let's get a check on Saudi Arabia and the Qatari index there. We see the Tadawul, just marginal loss, 0.07%. But a bigger move up, we see with the Qatari index, 0.26%. 11,336 points. Let's get a check on the U.S. now. See stock futures. It fell slightly today following a 4-day losing streak for the S&P 500 as tech names, dragged the broader market lower, and traders are weighing earnings from retail giants as Walmart. So futures on the Dow Jones Industrial Average, they'll see down 0.31% at 44,854. S&P 500, 0.15%, and the tech-heavy NASDAQ down about 0.08%, about 8 basis points at 23,303 points. But let's get a summary of yesterday's close from our correspondent, Maria Bird.
The U.S. stock market had an up and down day on Wednesday, as the Dow Jones was up slightly at 0.036%. The S&P 500 had a bit of a down day at 0.2% down, and the heavy tech NASDAQ had a dip of 0.67%. As many investors are watching to see what will happen in the stock market over the weeks and days ahead, as there are some thoughts that the AI bubble could be bursting. This has much of the tech industry wondering what will happen next. Major sell-offs on Wednesday had the U.S. stock market hit a bit of a dip, but only time will tell to see how this will pan out over the next few days and weeks ahead.
Thank you, Maria. Well, taking on to Asia now, we see Asia Pacific equities advance today with Australian stocks leading gains and defying Wall Street's tech-driven losses Yeah, we see the Nikkei, that was down 0.65%, but Australia looked much better there. Kospi, 0.37% up, 3,141 points. We see the Hang Seng, that closed 0.24% down, 25,104 points. Other markets we track there is green here. We see the Indian markets rose in early trade with the benchmark Nifty 50 there. That's 0.13% to close. The BSE Sensex index was up by 0.35%. That's Indian time. So Shanghai Composite also up 0.13% to close, 3,771 points. And the Nifty holding on. Let's see if this, carries on at 25,000. That's for the all-share index in India. All right, let's take it on to Europe now. Looking at markets here, we're checking in with Lars Holter in Berlin. Great to have you, Lars. How's it looking today?
Yeah, Ladi, what can I tell you? Same old problems here. Sideways trading continuing on like we've had for the last couple of days. Investors are desperately hoping for some kind of guidance for a breakout to either side, up or down, preferably up, of course. This kind of guidance, it didn't come from the latest developments on Russia and Ukraine. Now some are thinking it might come from this upcoming Fed meeting in Jackson Hole that you were just talking about as well. The big question is obviously what kind of interest rate policy is the U.S. Central Bank going for? But I can already tell you, Ladi, that looking at the mood in the market, it is, to me, entirely unclear if whatever is being said in Jackson Hole even is going to move the market here at all.
Definitely looking forward to that one. At this point, maybe Fed Chair Jerome Powell will give us some kind of surprise tomorrow. We're looking forward to that. But let's talk sports now. The new football season is beginning, all across Europe and in Germany. There's some interesting new sponsorships by banks, fintech companies. Talk to us about what's happening there.
Yeah, Ladi, that's indeed very interesting and strange for many fans how many companies from the financial sector are advertising suddenly on football jerseys now this coming season. The Landesbank Baden-Württemberg, that is a large public bank in southern Germany, is sponsoring the local team in Germany's first division, which is called the Bundesliga. There's a Berlin-based fintech Raisin that's sponsoring Union Berlin, the local club here, also in the first division. And then there's Targo Bank, a commercial bank, and all these banks, they're shelling out millions. And why, you wonder? Of course, as in any sponsorship deals, the companies are seeking exposure, and football is a pretty safe way to do that in Germany, where football, of course, gets a lot of attention. There's literally millions in the stadiums every year, a huge TV audience. And then specifically with regards to jersey sponsoring, people buy the jerseys in fan shops, they wear them out on the street, and that increases visibility tremendously. And now, Ladi, that's where financial companies seem to have an entirely different interest as well. They say they are very interested in gaining access to the club's VIP lounges as the main jersey sponsor, because in those VIP lounges, they say that's where they can make deals, and that's where they can show off to potential business partners, show them that they are, even though they might be relatively small fintech startups or so, that they're playing in the same league as some of the more traditional sponsors, which include some of the biggest companies in the country.
All right, but I'm curious, Lars, which team do you support? You seem to be some kind of Bayern Munich kind of supporter. Is that what you are?
Yeah, with most deals, Ladi, you really never know what will pay off and what will not. But there's two factors to consider here. First of all, there's definitely a quantitative aspect. And you do know that any sponsoring in that segment in a football will get you lots of eyeballs. But here's the downside. Football is a very emotional matter. Fans love it. Fans need to feel attached and connected to their clubs. And we've seen in the past that sometimes fans do not accept certain sponsors, that they refuse to identify with a certain partner. And for financial companies in particular, it could be harder to make an emotional connection with fans, much harder as it would be for, let's say, a car company or a drink like Red Bull or so. And then some advertising experts are also warning that sponsorships in sports in particular are sometimes tricky because they're tied to a team's success, meaning if your team loses, then that tarnishes the effect of the sponsorship sometimes as well.
Yeah, definitely. Nobody wants to support a losing team, at this point. But Lars, I was also asking, which team do you support?
Who do I support? Yeah, well, I like the Berlin team, of course, and I talked about them quickly here. Union Berlin, they're an interesting team. They came out of the second league, made it up into the first league, and they have a really interesting culture. They're a really cool team. I support them.
Fantastic. Thank you so much, Lars, for giving us the details there. What's playing out in Europe. Thank you.
Thank you, Ladi. Thanks.
All right, let's get a quick check on the crypto market now. Let's see if there's any green on the screen that's talking about the color right there. That's for the crypto market. We know Bitcoin's been struggling, for a bit now. But let's look at the headlines then. We see in Asia, Asia's wealthy. They're looking at boosting their crypto portfolios there. They're increasingly embracing cryptocurrency as a core part of their strategy, but by strong returns and improving regulatory clarity. Regional family offices and high net worth individuals are now allocating up to 5% of their portfolios to crypto, driven by fast-growing trading volumes and a standout performance such as 375% return from a crypto equity fund. The trend is being supported by market innovations and clearer governance, including the U.S. Genius Act and stablecoin regulations in Hong Kong. Now, we see the Winklevoss twins. They invested $21 million in a crypto pack there. That's the pioneers, cryptocurrency pioneers, Tyler and Cameron Winklevoss. They've injected $21 million into a newly formed political arm. That's Digital Freedom Fund called PAC, aimed at electing Republican candidates who support pro-crypto policies. The trio unveiled the initiative as a strategic push to reinforce the former President Trump's digital asset agenda, with a specific focus on preserving peer-to-peer transactions and opposing development of a U.S. central bank digital currencies. Yeah, we've not heard much about central bank digital currencies this year, but I guess that's coming by. Then we see Kanye West there, so official YZW meme coin that debuts. That's rapper Ye has launched a meme coin called YZW on the Solana blockchain, sparking a dramatic market response. The token's market capitalization briefly soared to $3 billion within minutes of its debut, driven by initial hype and celebrity influence. However, investor excitement quickly turned to caution as analysts flagged concerns over high token concentration, insider activity, rapid volatility, raising questions about its legitimacy and sustainability. So I guess it's still the same old problems with some of these celebrity tokens. They come up, some people make money, and a lot end up not making money. All right, let's look at the market now. We're seeing Bitcoin there, still struggling at this point, but it seems the altcoins are doing much better as Bitcoin is taking a step back. We're seeing Ethereum up 2.04% at $4,270. Even though that major pullback happened, Ethereum still managed to hold on to the $4,000 level. BNB, that's the native currency for the Binance exchange, that's also holding up to the $850 level, still close to its all-time highs. XRP $2.91, and we see most of the stable coins, USDT, USDE, that's in the red, showing that investors are trying to put back their feet in the market at this point, moving away from stability. Tron is also in the green. Solana, Cardano, Optimism, ICP. So the altcoins are moving right now, and as Bitcoin is taking a breather. Normally, what happens is when you see Bitcoin down, it drags the whole market down. So we're seeing a different move today. So that's how major markets are looking today. Those are the top stories on the continent. Thank you so much for watching. You can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, and we'll tell you where the money is flowing. Thank you for watching. I'm Ladi Williams. Bye for now.